Brexit, a decision that was meant to redefine the UK's position in the world. In January 2020, Britain formally left the European Union, ending a relationship that lasted almost 5 decades. But while the official exit is behind us, the economic impact of Brexit is far from over. Today, we're going to explore how Brexit is still shaping the UK's economy in almost every aspect, from trade and investment to the labor market and inflation. Let's start with the cornerstone of any economy, trade. Before Brexit, the UK was part of the EU's single market, allowing for frictionless trade across the continent. Goods, services, and capital moved freely. After Brexit, the UK exited both the single market and the customs union, leading to new barriers to trade. Companies suddenly had to deal with customs checks, rules of origin requirements, and tariffs. This new environment hit UK exporters hard, particularly small and medium-sized enterprises that lacked the resources to navigate the bureaucratic maze. The numbers tell a story of their own. In the first year after Brexit, UK exports to the EU fell significantly. While they have recovered somewhat, they are still below pre-Brexit levels. Importing from the EU has also become more cumbersome, with businesses reporting delays and higher costs. The situation is especially tough for industries that rely on complex supply chains, like automotive manufacturing. Many car parts cross the UK-EU border multiple times before a final product is assembled. Each crossing now means paperwork, inspections, and costs, undermining efficiency. The UK's services sector, which includes everything from banking to law, also felt the impact. Unlike goods, services were not well covered in the Brexit trade agreement. The financial services industry, one of the UK's biggest economic engines, lost its automatic passporting rights to operate freely across the EU. Many financial firms relocated parts of their operations to EU cities. The Amsterdam Stock Exchange, for instance, overtook London as Europe's largest trading hub, a symbolic yet significant shift. The loss of easy access to European markets has forced the financial sector to adapt, but it has also raised questions about London's long-term position as a global financial capital. Beyond trade, investment patterns have shifted as well. In the years leading up to the referendum, the UK was a top destination for foreign direct investment, attracting global companies that wanted a foothold in the European market. Brexit, however, introduced uncertainty that made investors cautious. Some global businesses have chosen to move their headquarters, supply chains, or distribution centers to EU countries to avoid complications. This shift has affected the construction sector, the property market, and even high-tech industries that rely on seamless supply chains. One of the most immediate consequences of Brexit has been the change in the UK's labor market. Before Brexit, the freedom of movement allowed EU nationals to live and work in the UK without restrictions. This brought in a steady flow of labor, particularly in sectors like agriculture, construction, healthcare, and hospitality. After Brexit, the new immigration rules have made it harder for low-skilled workers from Europe to come to the UK, leading to labor shortages. Farmers, for example, have struggled to find seasonal workers to pick crops, causing some to rot in the fields. Restaurants, hotels, and construction companies have faced similar challenges, pushing up wages in those sectors to attract British workers, which in turn has contributed to rising costs for consumers. These labor shortages are also affecting public services, especially the National Health Service, NHS. EU nationals once made up a significant portion of the NHS workforce, from doctors and nurses to support staff. Recruitment has become more challenging, forcing the government to rethink its immigration policies. New visa schemes have been introduced to fill gaps, but they haven't fully compensated for the loss of EU workers. This strain on labor markets has wider implications for productivity, wages, and the overall economy, as sectors struggle to adapt to a more restrictive environment. The Brexit impact isn't just visible in trade, finance, and labor. It's also influenced regulatory standards. As a member of the EU, the UK was subject to a wide array of EU regulations governing everything from food safety to environmental standards. Post-Brexit, the UK has more freedom to set its own rules, but this freedom comes with challenges. Diverging from EU standards can create barriers for British companies that want to export to Europe. Some sectors, like agriculture, are concerned about the potential dilution of standards, which could affect the UK's ability to compete on a global scale. On the flip side, Brexit has allowed the UK to pursue trade agreements independently. While supporters argue that this sovereignty gives the UK more control, the reality has been complex. Trade deals with countries like Australia, Canada, and New Zealand are celebrated as wins, but they don't fully compensate for the losses in trade with the EU, which remains the UK's largest trading partner. The economic repercussions of Brexit have also fed into another issue: inflation. Disruptions in supply chains due to new customs checks, combined with global challenges like the COVID-19 pandemic and the energy crisis, have driven up prices. Food imports, in particular, have become more expensive as tariffs and customs delays add costs to European products. This inflationary pressure has affected the cost of living across the UK, squeezing household budgets. Shoppers have noticed higher prices in supermarkets, and businesses have passed on increased costs to consumers. What about the political landscape? Brexit has deepened political divisions within the UK, most notably in Scotland and Northern Ireland. In Scotland, the vote to leave the EU reignited calls for independence. A majority of Scots voted to remain in the EU, and Brexit has strengthened the Scottish National Party's push for another independence referendum. In Northern Ireland, the post-Brexit trade arrangements created friction. The Northern Ireland Protocol, designed to avoid a hard border with Ireland, effectively keeps Northern Ireland aligned with some EU rules. This has caused political tensions, and the unionist community feels a sense of separation from the rest of the UK, complicating an already delicate political situation. Brexit has also changed the UK's relationship with Europe and the world. As a member of the EU, Britain was a key player in shaping European policy. Now it's on the outside, trying to establish a new identity. The UK has emphasized its global ambitions, pursuing partnerships beyond Europe. But the loss of influence within the EU has been noticeable, and Britain now faces the challenge of being a smaller voice on the global stage. In the face of these challenges, the UK government has focused on creating a post-Brexit economic strategy that promises growth and prosperity. Efforts to become a global leader in green technology, attract tech startups, and build stronger ties with emerging markets are part of this vision. However, it's an uphill battle, as the country must navigate a world where geopolitical dynamics are rapidly shifting. So what's next for the UK economy in this post-Brexit era? The truth is, the full impact of Brexit will take years, if not decades, to fully understand. Some sectors will adapt and thrive, finding new opportunities outside of Europe. Others will continue to struggle with the new reality of a more divided, more complex trade landscape. What's clear is that Brexit is not a one-off event. It's an ongoing process that will shape the UK's economy for generations to come. As the country finds its footing, the story of Brexit continues to evolve, affecting every corner of British life, from the way we do business to how we see ourselves on the global stage. It's a reminder that big decisions carry big consequences, and the real story of Brexit's economic impact is still being written.